In September 1929, a businessman in Manhattan felt unease. Markets were euphoric, yet something deep inside whispered collapse. One morning, he entered his marble bank, withdrew $12,000, and left calmly, clutching a leather briefcase heavy with cash. Within 2 days, the world fell apart. His fear saved him. Subscribe to Finance Through History, where every crisis hides a moral lesson about freedom and control. 2 days later, the market shattered. Stocks crashed and banks locked their doors. Crowds screamed through glass windows begging for cash. Inside vaults, silence. Outside, despair. Yet that one man walked home safely with his wealth intact because he trusted instinct more than headlines. In 1929, freedom meant paper in your hand. You could withdraw it, hide it, or spend it at will. No forms, no waiting, no approval. Wealth was tangible, heavy, and immediate, a physical extension of trust between man and money. To own stock meant holding a certificate bearing your name. If you wanted to sell, you handed it to a buyer. Property was literal, and transactions were human. You saw what you owned. You touched it. That simple transparency built real accountability. When banks failed in 1929, they did so openly. They ran out of money because too many people withdrew. Brutal, yes, but honest. The system didn't freeze you out. It broke visibly. The risk was shared, not hidden behind screens. Now imagine trying that today. You sense danger, log into your 401k, and press withdraw. Instead of dollars, you see warnings, penalties, taxes, processing delays. You don't hold your wealth anymore. It holds you. After 1929, regulators promised safety. What they built was control. Every reform since the Great Depression quietly removed your right to move freely. The system stopped serving savers and began protecting itself from them. In modern finance, you're punished for caution. Withdraw early, and 40% disappears to taxes and penalties. The architecture of restraint hides beneath language of long-term security. In truth, it's obedience training for capital. In 1929, you could take your money in minutes. Today, withdrawals take days or weeks. During panic, systems can legally suspend redemptions entirely. You are protected from yourself by design. In 2026, the trap isn't iron, it's code. Your assets live inside systems programmed to deny panic. The lock isn't mechanical, it's algorithmic. You don't own money, you rent visibility. The 1929 system failed because people panicked. Ours succeeds because people can't. Stability has become compulsion. You're told it's safer, and perhaps it is, for everyone but you. Now paperwork replaces permission. Withdrawals trigger review. Transfers need approval. Bureaucracy works faster than fear until crisis arrives. Then it works not at all. Your account balance is a promise, not property. It exists only while servers run. Pull the plug, and your wealth becomes a memory of pixels. When volatility hits, withdrawal buttons gray out. Processing. Pending. Words invented to soothe panic, but designed to enforce paralysis. Regulators didn't just ban risk, they centralized it. Liquidity now flows through bottlenecks. When everyone runs, systems seize. The promise of stability is the guarantee of collapse. Your bank can delay, freeze, or deny withdrawals if they seem unusual. Freedom is now conditional, wrapped in compliance. You think you can escape, but every exit has paperwork, penalties, or pauses. 1929 had chaos. We have structure, and that's worse. Every layer of security, regulation, and audit adds time, the most lethal currency in crisis. When seconds matter, systems count business days. Digital money pretends to be instant, yet your access depends on others granting permission. Ownership without access is theater, not freedom. We call it innovation, faster trades, digital banks, smart funds. But progress has reversed the direction of trust, from people to systems. In 1929, panic took days to spread. In 2026, it will travel in seconds. Fear has become fiber optic. The faster the system, the faster the fall. In 1929, humans screamed. In 2026, algorithms will. They'll sell ruthlessly, faster than comprehension, feeding collapse like reflex. Circuit breakers pause selling to restore order. But when trading resumes, the crash deepens. Modern restraint concentrates destruction. Today's leverage hides in derivatives, funds, and shadows. Regulators see stability, insiders see dynamite. 1929's 10-1 leverage looks humble now. In 2019, overnight funding seized for one day, rates jumped from 2% to 10%. That was during calm. Imagine the noise of real panic. Silicon Valley Bank collapsed in 36 hours. Depositors couldn't withdraw fast enough. 4 days later, rescue arrived. Too late for payroll. Speed killed safety. FDIC holds $125 billion, insure $10 trillion in deposits. The math works until 5% fail, then it doesn't. The system cannot scale panic. We call it robust because it hasn't failed yet, but a bridge isn't strong because cars still cross it. It's strong until the crack expands. 1929 believed in technology, 1999 in the internet, 2026 in AI. Every generation thinks it conquered risk. None do. Our money now lives inside cages we mistake for vaults. We call it progress because we can see the numbers, not because we can touch them. Modern leverage is invisible. In 1929, it lived on paper margins. Today, it hides in derivatives, shadow loans, and opaque funds. 20-to-1 positions exist quietly, ready to ignite when liquidity dries. Regulators think they've tamed speculation, but leverage has simply evolved, unseen, untouchable, and many times more dangerous. Markets are no longer driven by fear or greed, but by algorithms. Code reacts faster than conscience. When volatility spikes, programs sell automatically, amplifying decline with mathematical precision. The next crash won't be emotional, it will be mechanical, a digital stampede where no human can press pause. In March 2023, Silicon Valley Bank collapsed in 36 hours. A whisper became a run, amplified by group chats and mobile apps. Depositors didn't form lines outside branches, they formed queues of data packets. The age of instant panic arrived. When fear travels at 5G speed, collapse becomes real time. The Treasury market, backbone of global finance, now wobbles on whispers. Bid-ask spreads widen, buyers vanish. Each tremor exposes how digital liquidity is fragile theater, instant until it isn't. Even the safest assets depend on confidence, and confidence has no backup system. Insiders are never loud when they leave. In late 2024, CEOs and CFOs quietly sold billions of their own shares. The headlines praised innovation, but the smart money was already gone. They don't predict crashes, they avoid them. That's not timing, it's awareness. Sovereign funds have moved too. Norway's reduced stocks, Abu Dhabi's raised gold. They don't panic, they calculate. When trillion-dollar funds choose caution, it isn't fear, it's foresight. Governments are preparing for storms citizens don't see coming. Every collapse is preceded by comfort. The economy is strong, the anchors say. Earnings are solid. The same words were spoken in 1929, 2008, and 2025. Optimism isn't a lie, it's a lullaby sung before impact. Debt, speculation, arrogance, the trilogy that precedes every crash. Only the technology changes its costume. Human nature doesn't upgrade, it just digitizes the same mistakes faster. The yield curve has stayed inverted since 2022. Every recession in 70 years began this way, 12 to 18 months before decline. Now, we're past 39. The warning isn't subtle, it's historic, but faith in technology blinds eyes that once feared math. By 2026, every escape route has been closed. Taxes, time locks, digital gates, compliance checks. The system isn't malfunctioning, it's working perfectly. Safety is no longer optional, it's enforced. People believe they're in control because they can click buttons. But control isn't access. True power lies with whoever can freeze those buttons. The illusion of autonomy is the most effective restraint ever invented. Before 1929, people whistled in optimism. Before 2026, algorithms hum in silence. When volatility exceeds thresholds, they'll all sell together. That calm hum is the sound of waiting collapse. Your grandparents could act without permission. You cannot. Freedom wasn't stolen. It was traded for convenience. Every click you accepted replaced one choice with automation. Liberty outsourced. Safety has become the sales pitch of captivity. Every restriction is justified as protection. But protection from what? Freedom is now treated as a hazard to be managed, not a right to be honored. During crisis, institutions will protect their survival, not yours. Liquidity will be preserved for them, not withdrawn for you. Systems don't betray, they prioritize. You were never the priority. The man who withdrew in 1929 didn't outsmart markets, he simply had access. His success was freedom. Today, even the smartest investor is chained by structure. Awareness means nothing if action is impossible. When the next crash begins, you won't sprint to the bank. You'll stare at a spinning icon. Digital paralysis will replace physical panic. The emotion will be the same, helplessness, only quieter. The traps are synchronized, Europe, Asia, America, all digitized, all connected. When one market locks, all do. Globalization built prosperity and fragility in equal measure. One failure means every gate slams shut. The 1929 collapse took 4 years to reach bottom. The 2026 collapse could take 4 days. Algorithms don't wait for reason. They react to triggers. Velocity is the new violence. Every number that looks safe hides an assumption. Infinite liquidity, instant redemption, perpetual confidence. But assumptions are airlocks. They hold until the pressure breaks. History doesn't repeat. It rhymes in new syntax. The names change. The hubris doesn't. 1929 had speculation. 2026 has algorithms. Both built towers on leverage and faith. Both forgot gravity. Our generation doesn't defy systems. It updates passwords. Compliance has replaced rebellion. The cage is invisible because it's convenient. The cost of comfort is control. Physical money is nearly extinct. Large withdrawals raise suspicion. Freedom that once fit in a pocket now needs Wi-Fi to exist. When the plug pulls, the illusion vanishes. 1929 was rehearsal, a warning misunderstood. 2008 was an intermission. 2026 is the finale, where every mechanism that promised safety becomes the trapdoor. Your balance still glows on screen during crisis. That's the trick. Visibility feels like ownership, but until money moves, it's fiction. Numbers without agency. Every generation builds systems it can't escape. The lesson isn't economic, it's ethical. When safety outweighs freedom, collapse becomes correction. The price of comfort is always discipline. The powerful can exit quietly. Executives, sovereign funds, central banks. Ordinary people are told to stay invested, to ride it out. In every era, the wise leave while the faithful remain. People cling to optimism until it hurts. This time is different, our history's most expensive words. Faith becomes addiction, hope becomes trap, and truth arrives too late. When crisis hits, all systems lock simultaneously, withdrawals halted, trade suspended, banks reviewing unusual activity. The world will go quiet, and in that silence, wealth will evaporate. Your grandfather in 1929 grabbed cash and survived. You cannot, but awareness is still action. Freedom now lives in foresight, not flight. The gates haven't closed yet, but they will. Subscribe to Finance Through History, where every past collapse teaches how to protect your future freedom.